Today I'm going to be going through the Ardelyx Q3 earnings report, and just a heads up, I didn't actually think that this was a very good report, so if you don't like hearing bad news about Ardelyx, then I don't think this is going to be the best video for you. Having said that though, I am still bullish on Ardelyx, and I think there's an easy doubling of the price left still. However, compared to the growth of the last quarter, this quarter just wasn't up to scratch at all. So what I've done here to try and make things clearer is put the last 4 quarters into this spreadsheet. So this goes all the way back to Q4 2023. So in Q4 of 2023, we can see we had a revenue here of 34 million, and that increased by about 12 million for the next quarter. And then we had the big quarter increase of about $26 million. And then this quarter, again, we've had an increase of around $26 million. However, I think the red herring here is the product supply. You can see here we had a very big product supply here, just over $5 million. So what I've done here is take the product supply away from the revenue. So we can see in Q4 of 2023, we had $36 million. That went up by $10 million. Then we had the big quarter jump of $29 million. And then this quarter when it jumped to $20 million. And the reason why I think this is more important is because it really shows here that we went from a $29 million jump in the last quarter to a $20 million jump in this quarter. That's a significant reduction of 1/3. And it actually brings me to one of the main concerns that I had about this earnings report. And that is that I don't think the management were being very clear at all. In fact, I think they were being quite opaque with the shareholders. First of all, a fair chunk of the revenue growth was down to the product supply. And as you can see from the cost of goods, that the cost of goods really increased rapidly with this product supply. And the reason for that being is that the product supply is actually selling those goods onto another company. And of course, they're not doing that at the same margin as they do when they sell that to the end customer. So most of that revenue coming in is going out again as cost of goods. And you can also see here from the last 4 quarters that that product supply is very inconsistent. And the other thing I don't like about the management is at no point did they address the fact that Ibis-Rela and the exposure rates of growth have both slowed. They kind of hinted to this throughout the EI by saying that they had been talking to the subscribers to say continue subscribing as you had done before, even though exposure may not be available through Medicare as it was before. So this might explain the sharp drop in the rate of growth for exposure. However, they didn't mention at all why the Ibis-Rela slowed down from a growth of 7 million in a quarter down to 5 million in a quarter. And this concerns me quite a lot. I didn't actually pick up on this initially. I thought it had been 7 million again. But now that I've seen that it's 5 million, this affects the figures quite significantly. Because 7 million growth per quarter actually translates to just over 100 million growth per year. So over the 10-year lifespan, that does mean that Ibis-Rela should meet its $1 billion goal. However, at $5 million a quarter, that drops down to just 80 million for the year, which means over the 10-year period, Ibis-Rela would only get to $800 million sales. That's still a significant amount of sales, don't get me wrong, but we really shouldn't be seeing a slowdown in the Ibis-Rela growth at this stage. Maybe there's some other extenuating circumstances for this, but this just wasn't explained by the management in the ER at all. So I have seen people on StockTwit saying, well, at least we still beat the analyst estimates. But let's face it, the analysts' estimates were incredibly low. We had a $26 million increase last quarter, and they were predicting only a $12 million increase this quarter. So I'm really not surprised that we beat that. And the other thing that people are pointing out is that the EPS was much better than expected. And actually, if we go here and we take a look at the costs, we can see here the reason is just that the costs simply haven't increased. So all of that revenue increase has gone into the operating income. So we can see here that there is the R&D expenses, but for some reason Seeking Alpha added that into the cost of revenues before. But apart from that, pretty much the operating expenses were exactly the same on the last quarter. I'm not sure why they did this. They did say that they were going to increase the sales team even more. I'm really not sure why those costs haven't gone up, but that's the only reason we've seen the EPS be as good as it is. And I don't think that's really a reason to celebrate, because either A, they're going to have to make that expense at some point, or B, they don't make that expense and then they don't reap any of the benefits from that expense. So just as a clarifier at this point, I don't think it was a very good ER in terms of, I think a lot of us were expecting quite a bit more. But this is just one earnings report and I'm not jumping to any conclusions just yet. The path upwards is never going to be smooth and I'm very much waiting until the next quarter to see what happens next. However, having said that, I did want to give an honest appraisal about this earnings report. So if we take a look at the graph here, we can see it all looks pretty good actually. You can got the exposure rising quickly, you got ibis rela. But I think this is a little bit misleading. So with ibis rela, you really can't see the kink in the graph here where the rate of growth slowed down. So what I've done here is create a separate graph that really shows the differences. And you can see here with the ibis rela in the last quarter, we had that 7 million increase. And now that's gone down to just $5 million increase without any explanation whatsoever. And also on top of that, we had the exposure that went from 12 million to 22 million. And that's fallen down to 40 million in this quarter. So these are very significant changes in the rate of growth. I've also included here what I've called the honest revenue, which is the revenue minus the product supply. And we can also see here that the rate of growth has significantly slowed as well. But that's not surprising as it's just the sum of the exposure and the ibis rela. But I guess what you can see is the significant drop that actually creates. So another spreadsheet I want to show you is this one. So for those of you that have seen my previous videos, I was talking about how long the fundamentals would take for Ardelyx to reach its current stock price. So interestingly, the stock price was at a price similar to what it is now. And we can see here that with the current configuration, we were hoping by Q3 2025, we would have surpassed the fundamentals. And not only that, we would have seen a doubling in the stock price. However, we now need to change some variables. So the rate of growth was set to 1.25. However, the rate of growth actually went down in a quarter. So I'm just going to leave that flat as 1, which means we hope to maintain the current rate of growth that we have. And I'm going to change the last quarter growth to 20 million, because that's what it was. And we can see here it's now changed to Q4 of 2025, but there's no doubling here. It's just about meeting the current stock price at that point, and it's only in the next quarter where it would take another 2 quarters to reach a very similar fundamentals price as we were seeing before in Q3 of 2025. And not only that, if we were to lose the CMS battle, then this would actually reduce down to about 11 million. And then we wouldn't see fundamentals until the first quarter of 2027. So these are some significant changes to the forecast earnings of Ardelyx. So this is why I was so particularly bummed about this quarter, because it does make significant changes to the outcome of this company, but only if this trend just carry on in the manner of this quarter. Hopefully this quarter is just a blip and we can get back to that rate of growth in the following quarters. And this is why I found the management so frustrating in this earnings call, because I was really hoping to hear some reassurance from them about these numbers. But instead what we got was, oh, our numbers are really good, we're doing so well, we're growing at such a good rate. And they just glossed over the fact that the rate of growth has slowed down significantly. So for me, that was the most disappointing part about this earnings report. However, even if we did set the rate of growth just to match each quarter, and if we say that we lose the CMS battle, we are still going to see fundamentals match in 2027, which is only just 2 years away. So for me, it still means that Ardelyx is undervalued and there's a lot more potential to be seen here. So I'm certainly not selling any of my shares in Ardelyx, that's for sure. But it does mean that I'm going to be keeping an eye on the future developments of Ardelyx. If you think I've missed anything out from this video, let me know. I'd be really happy to hear about it. Otherwise, thanks for watching the video and I hope that you enjoyed it.